Hi guys, Luke Suddards here, Global Macro Strategist from Pepperstone again. Pre-recorded show, Tuesday morning. I will be live and trading for you to answer any questions when I do the live stream. So let's get cracking. The dollar, we're seeing a tiny bit of softness as we get underway in the European session. Do forgive me on the coughing. I am man down with the flu. So yeah, things are getting underway. The dollar, seeing a bit of weakness in the early hours of the session. Financial Times article came out last night about some positive processes taking place in the Ukraine-Russia negotiations. Demilitarization could not be one of their requests. Ukraine would have to give up their ambitions of joining NATO, but they could still be able to join the EU and guaranteed security protection. So market bid risk assets quite aggressively into that last night. We've also seen the US dollar JPY coming off a bit after its surge. That could also be feeding through into some dollar weakness. I'll get on to the specifics of why Japanese yen is seeing a bit more strength as we get to that chart. But let's have a look. We saw the symmetrical sort of triangle pattern here, and it's kind of a catalyst for price breaking out in either direction. We saw price breakout. It's back down to that trend line there. We'll have to see if it holds it. The RSI is curled a bit over again. Is it a false break, or are we going to see follow through to take out this high at around 99.5 and target 100? What's the catalyst? Will it have to be a deterioration in risk sentiment and further weakness in dollar yen? Let's move on to Euro US dollar, which is seeing a bit of a bounce this morning, probably on the back of that Financial Times article. Is also German 10-year yields are surging this morning, up quite a bit. So Euro US dollar, it's been capped by this 21-day exponential. I'm just going to swap over to the cursor. So 21-day exponential moving average has been capped by that level. So we'll see if price can push just above there. We've got 110, that significant round number. There's a bit of support there. And above there at around 112, we've got the 50-day simple moving average. I think, if we were to see price move back lower, the bottom of this descending trend line, the lower trend line of the descending channel would be key around this 109 area and then back down to 108 if we were to see further weakness. Let's look at cable here. Let me get back to the cursor, the arrow. We saw cable have a nice little rally off the swing low here around the 130. Got up back to that 38.2 retracement level around 132.4, 132.5. The 21-day exponential moving average sort of capped those gains there. And now we've rolled back over. There's a bit of a bounce here. The RSI is trying to basically not move back down to oversold. We're around this 131 area, so it'll be interesting to see how today's trade plays out. On the downside, 130 would be my target. On the upside, I'd be looking to move back to this 132 level around here. Let's take a look at Euro GBP. We've seen it's been bouncing around in this range around 0.845, 0.84, and then on the downside 0.83 after we saw that break of that down to about 0.82. You could just play this channel really. You've got good resistance here in the form of the downtrend line, the 200-day SMA. The RSI probably get close to that 60, which we can see here, cap, price peaks. So it's quite a sort of repetitive trade and can work out quite well for you. And on the downside, obviously, I'd be targeting that 0.83 level. And then moving on to the dollar yen, we're seeing a bit of a pullback here this morning. The Bank of Japan's summary of opinions that were released sort of just said that they see downside risk to the economy. Inflation, they don't see stabilizing at 2% because of that surge in energy prices. They don't think the economy is going to see wage growth, which is essential for them to start to normalize policy. We saw bond traders test that 0.25% yield curve control band, the upper band, around that 0% corridor, and they said that they would buy bonds in limited quantities. That obviously led to the yen weakening around 2-3 big figures yesterday. And today we've seen some Ministry of Finance members or government officials come out with some jawboning to say they're monitoring FX, and that's been enough to kind of cause a slight sell-off. But I don't think, JPY's weakness is over just yet unless we see a hard intervention and maybe the removal of a NIRP, negative interest rate policy, or the abandoning of the yield curve control cap by the Bank of Japan. Remember, the Ministry of Finance are the only ones who can directly intervene in FX by selling reserves and then buying yen to prop it up. um, so yeah, it's interesting to one to watch. If you did want to play this US dollar JPY on the long side, I'd kind of maybe use a trailing stop loss, shorten my position size due to lower my position size due to the extreme volatility, and maybe have two kind of trailing stop losses. If you wanted to use like a previous candle's low, maybe don't chuck out your entire position because there is a lot of volatility and you need to give room to breathe. But maybe have another level where you would close, so you'd close a partial first trade around there, let's say, and then you'd take it out, the closed entire position a bit lower, so that you could still keep some money on and trail the position. Let's move over to AUD JPY. Good barometer for risk. We've seen it surge. It's deeply in overbought territory here. We're seeing a bit of a doji here now. Could we see a bit of a test back down to this 90 level? Interesting. It's one to watch for sure. Then on to gold. Gold had a big sell-off yesterday. So what were the reason for that? Financial Times article was one of them. A stronger dollar probably didn't do too much help for gold. But we're getting, prices starting. If it continues in the southerly direction, we'll move closer to the 1.9 level, which was kind of where we were pre-invasion. And it'll be interesting to see if we move back to that swing low. Price is sort of a bit sticky here around this 38.2 Fibonacci retracement and 23.6 fib level. The RSI is a bit of no man's land, can't really see anything there. This sort of percentage above below moving average indicator I created, again, it's moved from extreme overbought territory, so a bit range bound now for gold, looking for the next catalyst either on the rates front or the geopolitical scene to potentially catalyze some price movement. Let's look at spot Brent. It's been interesting. We saw a large sell-off yesterday. A couple factors for this. The Iranian nuclear deal, America's still pushing back on it, even though UK, France, and Germany have agreed on the initial draft copy, happy with it. But America's the big boy in this contract. And then we had, a ceasefire from the Houthi rebels in Saudi Arabia. It's 3 days, so let's see how long that lasts. And we also obviously had China, the city of Shanghai, which is a big manufacturing hub, going into lockdown, a bit of demand destruction there. And then lastly, to end off the day, which caused some weakness into the US close later in the session, was obviously the Financial Times article unwinding a bit of that geopolitical risk premium that we saw. But we're seeing a bit of a bounce this morning, interestingly enough, on that 21-day exponential moving average, bit technical. Let's see if price can rally into the 120 zone if it follows through. But I think this 110 area is key for the bulls. If that breaks, we could track back down towards the $100 a barrel level. Just before we finish off, let's take a quick look at where Fed Fund futures interest rate pricing is. December 2022, we over 9.5 hikes now price for December 2022. Very punchy. We saw Citi last week, Friday, come out with very hawkish sort of expectations for the Fed. And things are looking interesting. July, we've got over 5 hikes already. And that basically saying that, and this is in 25 basis points, by the way. So that's essentially saying that we've got 9.5 25 basis point hikes priced, but we've only got we've got less than 8 meetings left. So that means that it's somewhere along the line the market's seeing a 50 basis point hike playing out. Interesting. Should help the dollar. Traditionally, the dollar tends to peak after the rate hiking cycle, but I think in those scenarios, most of the time it's been when global growth is recovering, and right now global growth isn't in that. It's a bit in the doldrums given the invasion, and we're in a much different inflationary environment. So I hope you've enjoyed today's Technical Tuesdays, and my nasally voice hasn't been too off-putting, and I'll see you all next week for another episode. Good luck trading out there, traders. All the best. Cheers.